Your bank doesn't actually have your money. Right now, as you read this, if every customer of your bank tried to withdraw their savings at the same time, the bank would collapse within hours. So here's the question nobody asks. What's the difference between your bank and a Ponzi scheme? Most of us grow up trusting banks completely. You deposit your paycheck, you see the number go up on your screen, and you assume that money is sitting in a vault somewhere with your name on it. It feels as safe as putting cash under a mattress, except with interest. But that's not how any of this works, not even close. And once you understand what's actually happening inside your bank, you'll never look at your account balance the same way again. Here's the basic mechanic. When you deposit $1,000 into your bank, the bank is legally allowed to lend out $900 of it to someone else. That someone else deposits their loan into their bank, and that bank lends out $810 of it, and so on until your original $1,000 has become nearly $10,000 circulating in the economy. This is called fractional reserve banking, and every major bank on earth runs on it. Think of it like a game of musical chairs. There are 10 people in the room, but only one chair. As long as nobody tries to sit down at the same time, the game keeps going perfectly. But the moment everyone rushes for that chair, somebody's going to hit the floor. Your bank account is that chair. Now here's where it starts to sound familiar. A Ponzi scheme works by taking money from new investors to pay back old ones. The operator never actually has the full amount owed to everyone. Your bank, structurally, does something almost identical. It collects deposits from customers, lends most of that money out, and relies on the fact that not everyone will ask for their money back at the same time. New deposits cover old withdrawals. Sound familiar? The difference, and this is critical, is that a Ponzi scheme is run in secret and is designed to collapse and steal. A bank runs this system openly, legally, and with government backing. In fact, the government invented a safety net specifically because this system is so fragile. It's called deposit insurance. In the US, the FDIC insures your deposits up to $250,000. In the Philippines, PDIC covers up to 500,000 pesos. The safety net exists precisely because without it, the whole structure would be terrifyingly unstable. Here's the part that should genuinely stop you. In 2023, Silicon Valley Bank, a 40-year-old institution holding $200 billion in assets, collapsed in 48 hours. Not because it was fraudulent, not because it was poorly run by criminal standards, but because enough customers got scared at the same time and all tried to withdraw at once. This is called a bank run. And every single bank in the world, no matter how large or reputable, is vulnerable to one. The fear itself is the weapon. So here's the truth. Your bank will never put in an advertisement. The number you see in your account is not a pile of money waiting for you. It is a legal promise, a promise backed by trust, by insurance, and by the quiet assumption that you won't need it all at once. The moment that trust breaks, the promise breaks with it. This isn't a conspiracy. It isn't fraud. It is, in fact, the engine of the entire modern economy. Every mortgage ever issued, every business loan, every car payment, all of it flows from this system. The very thing that makes banking feel like a Ponzi scheme is also the thing that funds economic growth. The knife cuts both ways. Now, zoom out. If governments and central banks know this system is fragile, why keep it? Because the alternative, banks that only lend what they hold, would mean almost no loans, almost no investment, and an economy that crawls. We've collectively decided that a little systemic risk is worth the explosive economic growth it enables. Every time you swipe your card, you're participating in the world's most trusted high-wire act. Your bank isn't running a scam, but it is running on faith, and the whole system only works because almost nobody panics at the same time. So the next time you check your balance, remember, that number is less a fact and more a very well-organized agreement. And if you want to go deeper, look up what happens when central banks print money to bail out banks that run dry, because that story makes this one look simple.